today. We're going to have some fun, but we're going to focus today's show on the infinite banking concept, how to become your own banker, how to control your money, solve your money problem. Probably the most important part of it right there, solving your money problem. That's what this is all about here today. And then we're going to get into a little bit about cash flow. What's the difference in having cash flow versus having a lot of assets? And does that make a difference? What's that look like in your life? As a formal financial planner, I understand very well that it makes a big difference, especially when you start looking at retirement and being able to go out there and live and do what you want. When you stop trading your time for money and you need your money out there making more money for you so you can go out there and live your life and do what you want with you and your family while still keeping in mind, hey, do I want to leave a legacy? Do I want to create generational wealth for my family, for my children, for my grandchildren? What does that look like? So we're going to dive into some of those topics today, but we want this to be interactive. We want to be able to answer any questions you have, talk specifically with you and your situation. So throughout the show, if you have any questions, utilize that Q&A section, put it in the Q&A box. The chat box, we'll chat with you, we'll ask questions, we'll interact. If you're watching the YouTube video of this, put your comments below. Let us know. Comment, and I'll go on there. I'll take a look at the comments. I'll reply back to you guys. So if you're watching the YouTube, give me a shout out. Let me know what you think, how Craig and I did today. But looking forward to this one, Craig. I know it's going to be a lot of fun. So real fast, quick introduction. Like I said, my name's Stephen Nagy. I partnered with Chris Naugle in 2019. We started the first educational company, money school, traveling the country quickly because of what happened in 2020, moved to a lot of digital, going online, doing webinars and social media. And I love this. I love Zoom. I love being able to reach so many people from all over the country. As you can see in the chat box, and we were just talking about before we hit record, people from literally from South Florida up into New York, into Canada, out into California, and even I see Hawaii on here. How cool is that, Craig? So we got people all over the country. So I love being able to do that. And it's a beautiful thing. I started my career in money as a personal financial advisor back in 2005 in Fort Myers, Florida. I worked with Ameriprise Financial, fully licensed Series 7, 66, 215 variable annuity, all the good stuff like that. So I really learned the traditional side of investing, the traditional side of how advisors look at money, and the path that a lot of people take, such as, invest in a 401k, get the company match, diversify into different types of stocks. And, as you get closer to retirement, you can get a little less risky with the types of stock market investments you have and all the rest of that kind of stuff, right? And I'm sure a lot of you have done that. And I learned very quickly as an advisor, it just doesn't work for a lot of people. And there's a lot of variables that are out of our control that if we don't understand money and we don't understand how to control our own money, that those things can whack us. I mean, how many of you, just as a quick example, in 2008, either yourselves or somebody that was planning to retire in the next few years, or maybe they had just retired and they had to go back to work, or they realized they had to work a lot longer because their retirement accounts fell drastically. They didn't have that kind of nest egg that they thought they were going to have. Did that happen to anybody on here? I saw it firsthand as an advisor happen to all kinds of people. And so it happens throughout history. We look at market cycles. Markets go up and down, up and down. So it's all good while they're going up. We've been in a hell of a bull run the last 20 years, since really 2009, 10. So 16, 17 years. It's been a fun game. You could throw basically money at anything and you were making money on it, but that doesn't happen forever, does it? We see downturns. We see times when things go down. And so it's important we understand money. We understand how to control our money. And that's what we're going to get into today. So I started my journey, like I said, in '05 as an advisor. After a few years, I learned about real estate investing and entrepreneurship. I quickly realized that's my people. That's my life. That's what I want to do moving forward. And since then, I have always owned my own companies, businesses, and have been an investor myself for my own money. However, I also realized that I also do love talking about this stuff. I love sharing my experience. I love learning new strategies, applying them and sharing them with other people. And so I've really, over the last 15, 16 years, had a hell of an opportunity to travel the country, teaching real estate investing, teaching alternative investments, teaching things like self-directed IRAs, becoming your own banker, the infinite banking concept. I spoke on thousands of stages to tens of thousands of people and have helped thousands of my own clients to this point. So it's been a lot of fun. And today I help Chris Naugle, Craig, our entire team, do everything we do with Private Money Club, with the BYOB Money School brands, the Money Multiplier, and everything else that you see out there. So just quick little story and background on myself so you guys know who you're learning from today and who I am. And I'm here to help. So I'm always available. We work all the time. We're always available to you. So we're here to help. And we've built a really powerful team of what we call our money mentors that are also here to help you. And so our team is here for you to answer questions, support you, and more importantly, help you implement and take action on everything that we teach. So Craig, if you don't mind, just real fast, your background and how you got here, and then we'll dive into this while I pull this up.
Yeah, absolutely. And at the end of the day, we come from different places. So you had all the numbers and certifications behind you, and I was just in the trenches trying to figure this stuff out. So you bring up the 2007, 2008 time frame, and back then, like many people, had some big impacts to life. And so I knew that the way I was doing things wasn't working, and I knew long term it wasn't going to work out. So the whole thing I was looking at is this program over here doesn't work, but I didn't know what to do. And I'm sure a lot of you out there are probably in those same shoes. Like, I'm not so sure the traditional thing that we're told to do is working, but what do we do? And that was the big question in my mind. So I went searching and searching and searching. And I came across the infinite banking, the whole process there, as Shauna mentioned, I was looking for solutions like, how am I going to pay for college for my daughters? How am I going to do this? How am I going to do that? And I went to a college planning seminar where this guy is talking about this program. I'm like, what in the world is this guy talking about? It turned out to be the infinite banking concept process. And I asked him, how do I learn about this? He said, you can book a call with me. I'll read a stack of books this tall. So I said, what are the books? And I would encourage everyone out there to look at these books, such as Becoming Your Own Banker by R. Nelson Nash, The Creature of Jekyll Island by Griffin. There's the Pirates of Manhattan. So it just started getting educated in money because I knew there was more to the story, but I didn't know what it was. So for 31 years, I was in a high-tech career doing, building data centers and doing all those cool things. But I was also a banker, just like Nelson Nash talks about. We should be in two careers, one as a banker and one as the thing we make our money from. So anyway, I always knew that eventually I want to get out and teach this. And I think today's topic is very relevant because we're going to talk about two paths. One is the accumulation model. The other is the model of how do I control the capital? How do I control my money that I have throughout my lifetime? And I was able to retire from that career and go into this and start teaching how I got to that point. So I think today's topic is very relevant for how I went through, my financial journey. And I just love that our team, everybody on our team is doing this. And to hear, Steven's background, my background, we come from different places, but we ended up in the same spot, which is really cool.
So one of the reasons that we become our own bank is to stop bleeding interest out to traditional banks. And what I mean by that is car loans, student loans, even housing, any kind of major purchase you might go out there and finance at a bank, businesses, all
So
the stuff that you
all of it.
typically would get a loan from a bank from. Instead, you can use your own banking policy and pay yourself back all of that interest. So instead of it bleeding out constantly, we're now recapturing it into our financial systems. And I know I'm getting a little ahead of myself here, Craig, but I'm just kind of laying out the main reasons. So debt, major purchases, and then number three, investing and growing wealth. So that's what Craig and I do a lot with our policies today is we use our policies in our banking systems to invest. And the reason I brought this up was because when we look at growing wealth and we look at investing, we look at helping other people, the Private Money Club half of Private Money Club are real estate investors that have deals, and half of Private Money Club are private lenders, people that have money that are looking to lend money to other people. And so, what I love about this is we can start a banking system. I can invest and grow my own wealth, build generational wealth for my family, and I can lend my money at the same time while it's completely protected because I do it the right way. I can lend myself money to somebody else that needs that money so they can grow their wealth. And now we're creating these win-win situations. Just those little things like that just get me so excited, Craig. And so I just wanted to mention that real fast. But can you real fast just kind of talk through why you created the vault?
There's no no getting away from the fact that we have a lot of debt in our country right now, not only personally, but corporations as well as our country. And so debt is a big thing we're all dealing with. And we're in kind of what they call this long market cycle where we're not quite in a recession, but there's fragments of evidence of it. And so what we want to do in those cycles is we want to get rid of some of these variable interest rate debts, these things that could crash us. So there's a lot of debt out there. And so Steven says, hey, why do we create this strategy and tool around helping people get out of debt? It's because there's so much out there. And if we can get that out of our life and build more positive cash flow, we can get to those other stages, like what Steven was talking about with going after those opportunities when they do come up. We've built capital, we've built a banking system, we've built a reserve of capital that we can go put to work. So Stephen, you've got some debt pictures up here. Let's just
Yeah.
talk through some of those.
Yeah, I mean, just real fast, just to give you an idea of what's going on. I mean, we mentioned the market cycles before and what that looks like. Throughout history, we follow these patterns. The trends seem to always follow the same short-term debt cycles of every 5 to 8 years, long-term every 75 to 100 years. And when we look at since the last real financial pullback, recession, whatever you want to call it, we called it the Great Recession back then in 2008. But remember, that was a 36% drop. And then it took nearly 5 years to recover back to normal. So we didn't even get back to normal till around 2013. But since 2008, when that drop, 36% drop occurred, we've now had the longest bull run in history with the S&P 500 up actually over 600% now. It was fueled heavily by the Federal Reserve monetary policy with money being injected into the economy and historically low interest rates. But what did that cause? It caused record inflation. We talked about that this morning on What the F Happened. And, we had, over the course of about 18 months, it was like cumulative over 20% inflation. It was the highest of my entire lifetime. Since then, it just came back a little bit and we're trying to get it under control, but we're still in this bull run right now that just keeps going. And that's kind of where everybody's at right now is this bull run going to continue? Or are we going to get back into these debt cycles where we're going to see a pullback or we're going to see things come back? And when we look at, okay, well, when we look at the S&P 500, the Dow Jones, that's Wall Street. So Wall Street, it's great if you have a bunch of money in brokerage accounts and 401ks, but what about the average everyday person that's out there trying to do what's right for their family, working a regular job, trying to put away where they can? Well, their savings has almost completely disappeared. And this is what we call a K-shaped economy that we're in right now, that we've been in. And it seems to be broadening more and more over the last couple of years. But all a K-shaped economy real fast means is when the S&P, the stock market indexes are all going up, but consumer sentiment, how people feel about the economy and their thoughts on it, continues to go down. And when you get that K shape right there where Wall Street's up and Main Street's down, we call it a K-shaped economy. And typically in history, every time we've had this kind of K-shaped economy, it's been followed by a major pullback, a recession, or a depression. So everything kind of points in that direction. And then we look at actual data. I mean, total debt, total household debt is up higher than it's ever been, approaching $20 trillion right now in 2026. And that's now non-housing and housing debt. Of course, the housing market has continued to increase. Prices are still very, very, very high. It's hard to afford a home, especially with interest rates where they are today. We look at just credit card balances. Again, Chris and I were just talking about not long ago when they surpassed $1 trillion, and now we're approaching $1.3 trillion, and it just keeps going up and up and up. So credit card balances continue to increase and grow. So we see all this stuff. I mean, record share of Americans carrying credit card debt, roughly 111 million people, 50% of Americans with a credit card and 40% of US adults carry some sort of credit card balance on a monthly basis. I mean, those numbers are very, very hard. So when we look at what's going on with the economy, that's why we do focus so much on debt. And so what's really cool cool about all of this, and the reason I brought this up a minute ago, Craig, is when we started talking about infinite banking in 2019 and 2020, and when I say we, I mean myself, Chris Naugle, Brent Kessler, some of our team, and Craig, you were just coming around then, right? Around 2021.
Yeah, I've been with the team for about 4 years now. Yep.
Yeah. And so what's really cool is Chris and I used to talk about infinite banking all day, every day. And we would get on the phone with people and we would talk to them about their debt situation. And we would always just tell them, we would say, hey, listen, we can use this policy to pay down your debt. It's going to work. It's proven to work. We can show you examples of how it works. And we can use like a kind of a simple spreadsheet to show you what's going to happen and what you're going to follow to do that. And then all of a sudden, Craig comes along. And Craig goes, hey guys, listen, I know how to build stuff. I know how to build software. I know how to build tools. I know how to build spreadsheets, advanced, very advanced spreadsheets. So what Craig did is he took everything that Chris and I and our team talk about all the time, and he made it into a reality. And what I mean by that is he created a software called the BYOB Vault. And now what we can do is we can take your specific situation. We can take all of your debts. We could take all the stuff that Chris and I always talk about, and we could take your specific banking policy, your specific banking system, plug it all into this BYOB vault that Craig created. And now it literally shows you visually over time, starting with day one, right through the next however many years it takes to pay that debt off, exactly what that plan looks like. If something happens a few months from now and you fall off the plan for whatever reason, you can go in and readjust the numbers to get you right back on track. So he literally was able to visualize and prove all the stuff that we used to just talk about. And to me, that's so cool. And so, all of you that wrote debt over in the chat box, if you haven't already, you should be the first one scheduling a call right now with our team, because that's exactly what's going to happen. We're going to get on the phone with you. We're going to ask you, what are those, without even knowing what infinite banking is, you can do this. We're going to ask you about these debts. We're going to start plugging it into the software, and we're going to create a plan for you. And guess what? Do we charge for any of that, Craig? No charge. We
We
don't,
do
we
that.
don't charge to do any of that for you. Okay. And we'll talk more about that in a second, but it's such a cool thing. But anything you want to add on the vault real fast, Craig? I just think
Yeah,
it's
I
amazing.
think one thing that's really, really important, there's a lot of people out there talking about how you can get out of debt and you can do it really fast, and you can use HELOCs, you can use velocity banking, do all these things. You can use infinite banking, and all of those things are true. But I'm going to put a really big asterisk on it. If we don't run your specific numbers, I've seen cases where using a HELOC may not be something you want to do right now. And so we just need to map out the scenario and look at what is your specific situation? What are your debts? What's your income? What are your interest rates? What's your cash flow look like? And so we look at all that, and that's why I want to build these tools, because that's complex stuff when you start just take this number, throw it over here, and run these numbers around. So it's really important, if you were to book a call with our team, we can run your numbers. We can give you a strategy that's going to work, not now, not just for now, but in the long term. So you
Yeah.
want to make sure your strategy works now, it works next year, and it works a year after that. So that's really what we do as a team is map that out for you.
Yeah, and one of the other reasons I want to bring this up front just real fast is we're going to dive in right now to show you kind of the basics of the infinite banking concept. We're not going to show you all the examples and case studies and everything we usually do during a full 90-minute IBC training, IBC training presentation. You can watch that on YouTube and many other places. But we wanted to get into the basics. And the reason I bring up the vault and solving your money problem up front before you even know what it is because that's exactly what our team does. Is we not only are the best at designing policies to fit your specific situation, and every single banking system, every policy we design, it's like a snowflake. It's unique. There's never one that are exactly the same. Every single one of them is different and unique. And I mention this because there are other people out there that can design policies. There's other people out there that can kind of do infinite banking with you. I don't think they can do it as good as we do, because we use not only make policies specific, but we have access to lots of infinite banking companies, insurance carriers out there. So we can literally pick the best carrier to fit your situation, as well as the best product and illustration to fit your situation. And not many people can say that. We have access to all of them, which is super cool. But not only up front are we designing the perfect policy for you, but for years to come, we're here for you. We continue to invest millions of dollars into our company to develop new software, new tools, and it's all designed to help you solve your money problem today and for years to come. And there's nobody else out there that can do that. And so I'm just very proud of what we've built as a company here at BYOB Money School, and very proud of our team that we work with that continues to work with our clients on a daily basis to make all of that happen. And so with that said, Craig, you want to jump into some of the basics real fast?
Yeah, let's run through the basics, and then if there are any questions as we go through this, go ahead and put them in the Q&A. I know there's been a few there, but we'll make sure we'll either answer them in just a response, or we'll bring it out live. So yeah, let's run through it.
All right, cool. And this slide, you guys, we do 3-day trainings. We call them Money School Blueprint Essentials events. We do one-off trainings all the time. But at the end of the day, these topics right here, what we call the wealth killers, these are the things that we really want to start focusing on. So as we start going down the rabbit hole of infinite banking and becoming your own bank, these are all little money problems that we're going to start solving. And so as we go today, we start talking about what the infinite banking concept is. We start talking about cash flow and assets. These are all things that can erode our journey along the way. So things like taxes. And so we talk about being a business owner, we talk about various tax write-offs, but even more importantly, just having our money in the right places where it can grow without eroding to things like taxes. So I'll give you one example. When it comes to the infinite banking concept, and using a specially designed whole life insurance policy, one of the reasons we use that as a vehicle is because all of the money we put into that policy, it grows tax-free for the rest of our lives. Okay. And then all of that growth in that policy someday is going to be paid out in the death benefit. Okay. That's what a whole life insurance policy does. So when we pass away, that money gets passed on to our beneficiaries. And by law, that money passes on through the whole life policy. The death benefit passes completely tax-free. Okay. Throughout the time. So starting in 2 weeks after the policy starts, you can start using that policy, meaning taking money from it. Well, when I put money into a whole life policy, it's in there growing tax-free. It's going to go to my beneficiaries someday completely tax-free. I can also take money from that policy. I borrow money from that policy to use for other things like paying off debt, major purchases, investing. When I take the money from the policy, it comes out tax-free while I'm using it, and then I'm just going to fund it right back in. So there's all these tax advantages to having these policies along the way. So I'm just going to kind of point things out as we go for you to start thinking about. I'm real big, Craig, when I teach, I don't like to always just tell people stuff. I want them to think about it on their own, like think about, what have I done in the past? Think about, how can I use this today? How can I use this in the future? And think about what it means for your life, not my life, not Craig's life, not Shauna's life. What does it look like for your life, right? And so I want you guys to start thinking about this. So I'm going to throw a lot of stuff at you for a reason, because I want you to think about it, how it applies to you. Inflation, inflation is one of those things where if we have our money just sitting in an envelope under our bed, buried in the backyard, like the mafia used to do, whatever, guess what? That money's just sitting there, not doing anything. Well, what did we just talk about a minute ago? Inflation. Inflation was record high a few years ago. Inflation as a country was still trying to get under control. Prices, and all inflation is your dollar is worth less and less and less and less and less. It's a erosion of the dollar. That's all inflation is. So what a dollar buys today is going to buy less next year, following year, years from now, right? And so we want to start understanding how to keep our money moving, how to keep our money in places, in vehicles that eliminate inflation. And I'll give you one example. The money, Craig, that we put into our policies, what's that money doing? It's in that policy. I just said it. It's growing tax-free. Also, it's not just growing, though, through risk. It's completely risk-free growth. It's guaranteed. It's 100% guaranteed to grow every single year that it sits in that policy completely tax-free. So what does that mean? Well, if inflation means the dollar is worth less and less and less every year, Well, guaranteed growth means the dollar's worth more and more and more every year. So it's guaranteed to grow. So we're starting to just look at these little things where, hey, let me eliminate inflation as a wealth killer from my life. Okay. So keeping money in motion, keeping money in vehicles that are constantly growing. Volatility. We hit that a lot just now, right? With the markets and debt cycles. And what if, you were ready to retire in '08 and the market went into a recession and pulled back 36% and the rest of it? Well, your money could disappear, right? So we want to understand these markets and cycles and investments so that we can prepare and plan. Okay. Nobody knew COVID was coming, but if you understood where your money was, you could quickly make some moves where maybe you could, maybe not lose as much or something of that nature. So volatility, very important. We understand that and have our money in the right places at the right times. I mean, how many of you like the word guarantee? We're doing a lot right now. It's not the sexiest subject, but because of the high interest rate environment we're living in right now, guaranteed fixed annuities have become a hot topic. I never thought I'd be talking about annuities, but here we are today. We actually have Brian Fouts on with us right now, listening and watching, and he's our annuity specialist. And Brian can help you guys. Anybody wants to learn how to guarantee income for the rest of their lives, guarantee that they're going to have money when they need it. Well, rates have never been better for these annuities as right now, and it's guaranteed, eliminating volatility from our lives. So this is all stuff that's important. And then of course, interest. And that's what we're going to talk about, the infinite banking concept, and stop bleeding that interest. So Craig, I've always asked myself, all the stuff that we teach, it's not hard. It's not rocket science. We do it all for you, essentially. Like you don't even have to do anything. Just tell us what you have going on and we'll do the rest of the work for you. And you just follow the plan. But why don't more people do this stuff, Craig? Have you ever thought to yourself that? Like, have you ever thought, like, why, how come everybody I talk to, all my friends, all my family, whoever I meet and tell about this, why doesn't everybody do it? Have you ever thought about that?
Oh, I do. I think a lot of, and it's, we get one, I think we are told a certain way, following the status quo is what you've got on the mindset, but we don't question why we do what we do. Does anyone here actually question why you do what you do? And if I go back to when I started, working, getting out of college, you're busy and then eventually you start family and you have all this stuff going on. It's almost the simple button is just saying, hey, I'm just going to go to work, do my thing, get paid, put my money in this 401k thing, and I hope that some point down the road it's all going to work out. And so, do you ever question, is that the right plan? Does that actually work? And when I started looking at people that followed that path, I'm like, how well did that work for them? And when you think about volatility, because Stephen, you brought up this point earlier, what if you were retiring in 2007 or 2008? What if you retire in the next market downturn? You're going to burn your accumulation pile down quickly when the market's diving down. And there's the sequence of returns or the drawdown effect. And when you think about volatility, if the market goes down 10%, you need to go up 11% just to get back to where you started. If it's down 30%, you got to go 43%. If it's down 50%, you got to gain 100%. And it's not so much that we have to get back up, say from 30% to 43%. The dangerous part in my mind is how long is it going to be before it gets there? Is it going to be 5 years? Is it going to be 10 years? Is it going to be like in the Great Depression, it was 25 years, and I've got the numbers to prove it. 25 years before the market corrected. And not that, we'll probably see another one of those, but when we talk about volatility and we follow the status quo, these are the things we should be thinking about. And I like that Mark put he questions stuff every day on all sorts of stuff. And I just think we don't pause enough to think about why are we doing what we're doing. And if we don't have a good answer for it, we should ask, why are we doing what we're doing? But I think that's really the crux of it, Stephen, is a lot of people don't want to think about why the path they're on, why they're doing it.
Yeah, and we just assume, hey, people have been doing this for 50 years. It
Yeah.
must be the right thing to do. Let's just keep doing that same thing. And, when you look at a macro view of stuff, like sure, it seems like everything works out for everybody, but again, it kind of gets back to that K-shaped economy. Is it really for everybody? And what does that look like? And the cool thing, Craig, is a lot of what we teach, again, it's not complicated. It's not like you're changing your entire life. We're not telling you quit your job and go start some, business or something like that, which I think is a great idea, do something on
Yeah.
the side, but we're not telling you that. We're telling you really with the infinite banking concept, especially learn a little bit, spend a couple hours, learn it, and change one thing where your money goes first.
And I think and I'll just say it, I think one of the big problems is it doesn't change everything immediately. So you're not going to get rich tomorrow. You're not going to completely change your outlook in your world tomorrow. But I will say by doing this program and doing money this way, there are some immediate benefits. And we can talk about those, but the trajectory, the long-term path that you're on is going to be way better. I would say would be way better than following the status quo. So I think you asked, why don't more people do this? I think because it takes time, it takes a little bit of effort to change and learn and get educated on it.
Yeah, I'm not going to beat up dead horse with this because a lot of this stuff just mindset. Once you learn
Yep.
it, you'll never unlearn it. We talk about this video on YouTube called the backwards bicycle that shows how when you learn how to ride a bike, everybody's always heard like if you could ride a bike, you could wait 20 years, hop back on a bike, your memory remembers how to do it. But a little kid that never rode one before, they fall over a bunch of times, they learn. So you learn how to ride a bike, you never forget it. But what happens if you reverse the handlebars on a bike and you change the way the bike operates? Well, you hop on that thing and all of a sudden you can no longer ride the bike. The bike you're done with, you can no longer ride it. And so it's that mindset. But once you practice and you keep going and going and going, you relearn how to now ride the bike with the backwards handlebars. Guess what? Now you can get out there and go with it. And a lot of times it's just we've been beat one way of thinking our whole lives. It takes something to change that. But once you see it, you can never unsee it. And that's what happens with the infinite banking concept. People, once they do understand it, you'll never go back to the old way of looking at money and looking at banking ever again. It's one of those things that just happens. And before I move on, the last thing I want to mention just on this is fear. Um, have you ever done anything, Craig, that you were scared? You think back and you were scared to death to do the first time or two, and today you do it like it's nothing?
Yeah, my first wealth webinar.
Really? That's a good example, actually, though. Actually, now you say that, I remember the first time I ever spoke in front of a stage of 100 people, and I thought I was going to die. And now I jump on stage and it's like nothing, right?
Yeah,
Well,
you're a professional actor. I mean, you're good at this. You're a presenter.
I like
Yeah.
to have fun, Craig. I like to be real and have fun. But yeah, I mean, fear is one of those things that after you do it once or twice, and a lot of times it just takes a little education, knowing, all fear is the unknown. That's all fear is not knowing what's going to happen, what's next, what's about to go on. And that's all fear really is. If you think about it, like if you're scared of the dark, why? Because you can't see anything. You don't know what's out there. You don't know what's happening. You're scared of the ocean. Why? Because you look down there and you're like, man, there could be a million sharks out there, which, yeah, but also know the sharks aren't going to attack you right when you jump in the water, right? But a lot of people are scared of this stuff or scared of flying. I know somebody on this webinar right now is very, very scared of flying and getting in airplanes. But when you look at reality, guess what? Flying is much, much, much safer than driving, statistically speaking. So it's one of those things where maybe flying's not the best topic because you're not in control. But once you kind of understand it a little bit more, and once you do it, and more importantly, you have support. You have somebody to help you. You have somebody to push you and get you there. And once you're doing it, to hold your hand, and riding a bike if you're scared to ride a bike. But what happens if your dad or your mom is holding you up on that bike and helping you? Your fear goes away, and then all of a sudden you're pedaling and you're off, and they let go of you, and you're doing it on your own. And whoa, mama, you know what I mean? It's just such a cool thing. So the fear fades away, but it does take getting out there, understanding it, and having the support system. And again, that's where I think we excel the best, Craig. We provide more education than anybody else. We provide more tools and support than anybody else. And we provide the people to help you do it. All right, we're ready to move on. You agree with that?
Yep, let's go.
Cool. All right, let's keep on rolling. I don't know what slides are on here. I had a presenter view, but I'm trying to get to a specific slide. I'll get there. Some good books real fast. If you guys haven't read these, anything by Robert Kiyosaki, anything by Tony Robbins, Becoming Your Own Banker right there by R. Nelson Nash, the Bible of infinite banking, so to say, right? Of course, Brent and Chris's book, Mapping Out the Millionaire Mystery. If you don't have if you don't have a copy of Mapping Out the Millionaire Mystery or the Private Money Guide, just let me know in the chat box. I'll get you guys a link to the digital copies for free, so you guys can read those digital. You can put them on your Kindle or just read them as a PDF format. But if you don't have those, you want those digital, let me know. I'll shoot them over to you. I probably should. Okay, here we go. So what is infinite banking, the money multiplier method? We do teach it in three different kind of segments, and we're going to talk on the first one today, and then we're going to move on. So the machine. What is this infinite banking, be your own banker machine? And then, of course, we get into the marathon, which are different case studies and examples, and then what the generational aspects of investing with this looks like down the road. But let's focus on the machine today, Craig, if that's cool with you.
Yeah, let's do
So
it.
what is this machine? I've mentioned it a few times. It's a dividend paying whole life insurance policy from a mutually owned insurance company. So Craig, can you just hit on this real fast, a little bit about the dividend paying, why we use mutual companies, and just a little bit about the three, five, four, five, six companies that we use?
Yeah, so when it comes to the tool or the machine that we use for this process, it is a whole life insurance policy. So there's nothing that we're trying to hide there. It's the tool that we use, and the reason we use it is because there are guarantees inside of the policy. So there's guaranteed growth no matter what happens in the market, no matter what happens in the world economy. There's growth in this thing every year, every day actually. Now, on top of that, if you're working with a mutual company as a policy holder, you kind of have some I guess I'd almost say like you almost have ownership to some degree where they're giving you dividends based on what do they have left over after they pay expenses, death claims, mortality charges, expenses in their company. So the dividends aren't guaranteed, but the companies we work with, and I'm going to put a quiz out there for everybody. We work with a handful of mutual insurance companies that pay dividends, and they've all been around for well over 100 years. How many times do you think they've missed paying a dividend? Does anyone want to guess? Just put in the chat, 5 times, 10 times, 100 times. Dottie comes in never. Thomas says zero. We have Scotty never. You're right. They've never missed paying dividends. So although they're not guaranteed, the insurance company's not going to say, hey, every year you're getting a dividend. They've been consistently paid. So with the guaranteed growth and the dividends, we have a pretty nice machine here. Now, here's the fun part. What if you could have this going on, this compounding and dividends and growth, and still use the money? You can take a loan from the insurance company and put that into debt reduction. You can, finance major purchases. You can fund opportunities. So now you've got this machine over here going, and you have death benefit. You have all the tax benefits Stephen talked about. There's just so many things that we like about this machine. And so and I know Brent Kessler says this all the time, Chris will say it, and Stephen, you'll say it. If you can find a better tool than this for that process, we'd love to hear about it. But this is the best tool we found. That's why we use a dividend paying whole life policy from our mutual company.
All right, very good. And I just shared the link over in the chat box. A link if you want those digital ebooks, just click that right there. And on the left side says free resources, download resources, and it'll let you access all of those books. And Craig, love what you just said about that. We pick these companies for a reason. And then, the reason we also use a whole life policy to build this machine as the vehicle is because it's the only place legally speaking that you can place your money and get all of these advantages from. And these laws are set by the IRS and the federal government, and they've been used for hundreds of years. Now they have changed, back in the late 70s, early 80s. I gotta look at the exact date. The IRS came out with a rule called the MEC rules. which stands for MEC, Modified Endowment Contract. And basically, those MEC laws said as long as you design a whole life policy around these specific rules that we're giving you, you're allowed to do everything else with it that you want to, that we do with banking. And so when we build these policies for you, we build them right to that MEC limit. We're very, very good at this. And that's what keeps that policy tax free and allows you to get all these advantages. And so this silly whole life insurance policy, it just gives us so many benefits, not even to mention the death benefit. And the other thing I want to say on this real fast before we move on, that's important. The reason that we can do all of these trainings for free, the reason we can do these calls with you for free, the reason we will never charge you a dime to set up your banking system, to solve your money problem, to show you how we're going to pay out the debt with it, to do all this for you for free. The reason we can do that is because we are all licensed life insurance agents. And since we're using a whole life policy for this system, we get paid directly from those mutually owned insurance companies. So, just as an example, if you were to call one of the companies we use is One America, okay? So let's say you call One America and you go, hey, I'd like to buy a whole life insurance policy. Well, they're going to give you that whole life insurance policy. You call us and say, hey, I want to buy this same whole life insurance policy. It's going to be the exact same whole life insurance policy. So the way these insurance carriers work is they don't like give you a better deal if you don't go through an agent. You actually have to go through a licensed insurance agent. And because there's so many state laws and regulations around it. And that's exactly what we do. So we're all licensed agents. So that way we can do everything we do for you for free. And the insurance companies actually pay us, which is to me super, super cool, Craig, which I love too. Um,
Yeah.
any last words on that?
No, I think that was good. And so there's a design process we go through, and that design process is always built around what is the thing you're trying to do with that? What are you trying to accomplish? So that's really what drives the design. Now, there's a couple questions. I think this is probably as good as any to pose them. Thomas and Perry both asked similar types of questions about age limitation. So is there at some point, is there an age that this doesn't work? Um, so Stephen, do you want to kind of talk about that? Is at some point, if I'm 85, will this work? If I'm 65, will this work?
Yeah, I mean, everybody's a little bit different. It's heavily based on your health. So, obviously somebody in their mid 70s, getting older than that, if you're extremely healthy, there's, or just I shouldn't say extremely, but if you're a healthy individual, right up until about 80, I think where do we have the cutoff, Craig? Around 82?
There, I mean, there are some writers that drop off, saying you're, 75. There's some companies we could probably go a little bit later. Um, but we really need to understand at that point, what are you trying to accomplish with it? If there's some legacy is got to be an important aspect. We can still make something work for you. But 65 definitely would work. Certainly some disclaimers and asterisks around um, your income, your health, all of those things. And that's really where when we have strategy calls, we figure all that stuff out. And if we're not quite sure, we can do something called preliminary underwriting. So without you having to go through the whole application process, we can put into the insurance company, say, hey, we've got, someone named Bob from Arizona. Bob's age such and such, has these conditions. Would you consider a policy on that person? So that gives us some benefit of knowing which company might be the best fit, which one would consider the case if there are some challenges with health or other things going on. Um, with that said, Caroline asked a good question too. She says, so for someone that's a senior, can you have a policy that you own on a younger person? So could you potentially have a policy on your son or your daughter, where you still control it, but the insurance is on them? So that question has a lot of depends as well. We have to establish insurable interest. So the answer is yes, but we have to establish insurable interest on why would you have ownership of a policy on someone else's life. We do a lot of that in company insurance, key person, buy sell agreements. You can do policies on grandchildren. So it can be done. We just need to understand the insurable interest and prove that to the insurance companies. So that's
Yeah.
another path.
Yeah, I love it. And all of this starts with a phone call, just so everyone knows. I put a link over in the chat box. If you click that mentors.beyourownbanker.com link, it'll bring you to a calendar scheduling page. So just pick a day and a time that's convenient for you. Our Nelson Nash Infinite Banking certified money mentors are standing by, ready to go, ready to help you. We prefer doing a Zoom call for that strategy. So if you can be in front of a computer or phone, on video, that's the best. If not, just let us know and we'll call you. But that's right there. Or if you'd rather us just give you a shout after this show today, put your phone number in the chat box, but send it to a host and panelists. So not everybody has your personal phone number, but send us your phone number and we will call you as soon as the is over. I did want to mention also Tess Hulick is over in the chat box and she's been answering questions. Tess is one of our money mentors with infinite banking as well as an annuity specialist. So Tess is also over in the chat box supporting and helping answer questions with us today if you see that over in the chat box. All right, back to the show, Craig. So the machine, all we're doing with this whole life insurance policy, that's the vehicle, that's the product. And then the real power of it comes in by using the concept. So what is the infinite banking concept? And how do you actually become your own banker? And all that is the flow of how the money works, what the money's doing and putting it into the policy, pulling it out, applying it to whatever you're doing, paying off debt, major purchases, investing, recapturing that money and basically just doing it over and over and over again. And it's pretty simple, but that's what we can lay out and show you how that works. And so really when we create a banking system, we're just doing what the banks do. Banks are the largest purchasers of whole life insurance in the country. They're called BOLI, BOLI. Look this up. Bank-owned life insurance. It's very similar to what Craig mentioned a minute ago in COLI, company-owned life insurance. So BOLI is bank-owned life insurance. So banks are buying these policies on all of their VPs. That's why almost everybody at a bank is a VP because the bank then has an insurable interest and they can buy a policy on these people. So if banks are doing it and we're mimicking banks, we should probably start buying these policies also. Right. And that's exactly what banks are doing. And then banks take take their other money and they get into real estate. So they do mortgage loans, they do private lending through mortgage loans. Banks go out there and they buy real estate. I mean, if you think about where banks are located, they're everywhere. They're on every corner in every city. They're the largest high rises in every major city. They're everywhere. The banks are out there buying real estate, putting their offices in this real estate because they understand how money works. So that's exactly what we teach. Put the money in the policy, solve your money problem, keep that money moving. Real estate's a great option for that. It's why we have Private Money Club, rinse and repeat, grow your wealth. And really, that's what this is all about. Lots of people have used this strategy throughout history as well. This is nothing that we developed or came up with. We learned from our Nelson Nash, but it's been used for hundreds of years. Presidents have used this strategy. It's become very big strategy when it comes to high profile coaches, people like Jim Harbaugh. We've seen coaches in the NFL now being paid this way. We see very high level CEOs and executives now being paid through these deferred comp plans using whole life and different strategies that we do. So it's becoming more and more common. But even looking at history, people like Walt Disney used whole life to fund and keep Disney World going. Ray Kroc with McDonald's, Doris Christopher with Pampered Chef. And of course, people like the JPs, the Morgans, the Rockefellers, the Chases, and so on and so forth have used this throughout history. So what does this mean? How does this machine actually operate? We're going to spend about 5 minutes on this, Craig, just the principles of commercial banking. So do you want to kind of talk through this as I go? I mean, it's pretty simple. We all understand when you earn money, you take the money and it gets put into your checking account at the bank, right? And then the bank does what with that money? Well, they don't just, put it in an envelope in a box and wait for you to come get it. The bank takes that money, they immediately start moving that money, like I just said. So the bank, for example, they're going to take your money, that you deposit into the bank, and then they're going to lend it out on a home loan, on a mortgage. All right. So let's just say for simplicity here, that the money that you put at the bank, let's say in a savings account, they pay you 4%. And then they lend that money to a homeowner at 7%. Well, the homeowner is going to take that, or the home seller is going to take that property, take that money, give it to the seller. The seller is going to do it now with that money, put it right back in the bank. So the bank just does this over and over again with all types of different loans, car loans, home remodel loans, debt consolidation loans, so on and so forth. So at the end of the day, what did the bank just do? Well, the bank is paying you 4% on the money that you're sitting there, that you're giving them. And then they're getting that money moving and they're making money. So they're making what's called a spread. A spread is the difference in what the money's earning somewhere else versus what it's earning here. So in this case, 4% you're earning. Well, the bank is lending that money at 7%. So they're making a 3% spread, for example, on a home mortgage note. Well, they're making about a 4% spread on a car note. They're making about a 5% spread on a home remodel note, and they're making about an 8% spread on unsecured debt consolidation type loans. So at the end of the day, the bank just made about 20% off of your money that they're paying you 4% on, which is about a 500% return on your money that you have sitting at the bank. And so I ask this question all the time. If you love if you love banks and you love financial institutions and you love that all of those people make billions of dollars off of your hard-earned money, keep doing what you're doing, okay? But if you say, I would rather be the one making these spreads, I would rather keep all of that interest that's bled out into my family's financials today and in the future, then you're in the right place if you'd rather do that. What do you think, Craig?
Yeah, I think there's more to this story. Can you go back to the picture of the bank because and just kind of draw out the flow of the money? Let's think about the process of banking. If you're putting your $100,000 into the bank, what is it doing? It's sitting there, right? It's not moving. So your money goes into the bank and it sits. The process we're trying to teach is do what the bank's doing, which they're moving the money, right? So they're taking that money, loaning it out to someone for a home, loaning it out to someone for a car, loaning it out for a home remodel, loaning it out for contractors, debt consolidation. So there's a big difference here in why they're getting that numbers because in the depositor, they put the money in the bank, let it sit. The bank is going to keep that money moving and keep it recycling and going and going and going. Now, the other thing the bank is doing is they have a regulation to keep some reserves. And where are they putting those reserves? Does anyone know where those tier one reserves are going that the bank has to keep? I'll give you a hint. Stephen already mentioned it. Does anyone know where those reserves are going? Starts with a B, has no, and L and I. It's the bank-owned life insurance. So the banks are moving their money. The banks are putting their reserve capital into, cash value life insurance. So why don't we just do what they do instead of just letting our money sit? So I think I love the numbers on this slide, Stephen, but I also like the fact that we can also teach the process here of keep the money moving and put your reserves into a better place than their bank.
Super cool, man.
Yeah.
Very, very, very good stuff. And a lot of this stuff we've read places, we've learned, research. There's a cool site out there called BauerFinancial.com that studies banks and researches them and puts out data on banks and things of that nature. And a lot of this came from that site. So if you ever want to check that out on your own, Power Financial is the ones who told us banks make between 400 and 1,300% on money that you leave there. So plain and simple. What do you think? Well, a lot of you guys have seen this example. Let's dive into the next section. What do you think, Craig? Talk a little bit about cash flow.
Yeah, let's do it.
Are we good with the basics? Everybody understand? I mean, let me know, guys, in the chat box. Like, you guys kind of getting the basics of how banking works, how we're going to take our money, we're going to warehouse it in this whole life policy so we get all those benefits while simultaneously taking the money from the policy to pay off debt, major purchases, invest. So everybody kind of getting those basics right there. And again, once you get these basics, the next step is just schedule a call. We're not going to sell you guys anything. We're not here to offer you anything on the phone, anything like that. We're literally just going to solve your money problem. We're going to show you what that looks like. And if you want to do it, great. We'll start the policy with you and help you do it. If not, no problem at all, but at least you know. So if you guys understand these basics, go on that link right now real fast. I'll put it in there and get that call scheduled. I want to make sure you get those calls scheduled before we move on. So I'm going to pull up the next little slideshow while people are booking those calls real fast. We hear this all the time, Craig. You just had mentioned earlier to me, we do mastermind events, once or twice a year usually. But Craig, myself, and about 15, we usually have about 15 to 20 people at our inner circle masterminds. And we were in Sundance, Utah, beautiful resort in the mountains of Utah. And we were sitting around a hot tub and we were talking to people about this, money topics and their situations and stuff. And Craig, you want to share a little bit about what he was telling us? He owns all this real estate. He's worth all this money, but what was the problem?
Yeah, and it's not, I wouldn't even say, unfortunately, it's not a really a unique situation where people have worked really hard, put a ton of effort into building out a real estate portfolio. They own a lot of real estate, so they have a lot of assets, or maybe we'll just say their net worth is really high. This particular person's problem, and in others we've talked to, they don't have cash flow. So it's time to go buy groceries. They're constantly squeezed because they don't have the cash flow. It's all going into the assets. So the real problem that we have here is that you can't take your net worth to the grocery store and buy bread, right? You can't go to the grocery store and say, "Hey, look at this list of assets I have. Can I just buy some groceries and I'll pay you back some other day?" So absolutely asset rich, cash flow poor, and just trying to figure out how do you re-engineer that whole thing. So a lot of what we're talking about in this process is, and it's not even that the rate of return, oftentimes isn't the focus. It is important, but it shouldn't be the whole focus. It's how much control do I have? How much cash flow do I have? Because that's ultimately what we live off of. Assets are important, and can we get assets that create cash flow? That's really what I think I would be more focused on than building and putting every dollar into assets that just appreciate, but I don't have any control over them.
Yeah, and a lot of it, people, it goes kind of back to the mindset, like, a lot of people in that situation, they thought they were doing everything right. They went out there and, learned how to invest and started buying assets and growing their net worth. And then you turn around and you're like, wait a minute, I have no money to live on. These assets aren't producing anything for me that I need. And we see it, like you said, happen all the time, correct? So a lot of times just kind of understanding that and understanding what your options are and maybe building a little more balanced portfolio. So let's start with the question, kind of underneath every question. Why does it feel that way? Like where you feel like you're stuck in this situation? And is there anybody on here that feels like this? I don't have the chat in front of me right now, but in the chat, is there anybody that's in a situation similar to that? Where
Yeah, I
you
guess the
thought you
way
were
I'd
doing the right thing,
almost,
but it no longer feels like freedom.
yeah, I'd almost look at it, are you a person that you feel like you have assets, you've done a good job of earning money, putting it away, maybe it's in a 401k, maybe it's in retirement funds, but you don't feel like you're quite there. Like something's not right yet. And I guess that's what we're looking for is, are you similar to that real estate person where you've got a high net worth, but your cash is just cash flow is poor? Um, because that's the thing we want to talk about. How do we fix that?
Yeah, absolutely. And just to give you a couple more examples, good on paper, good income, making good money. You have the retirement accounts, the home with equity in it. You have some money in savings. It's all growing on schedule. Um, Still feeling tight, an opportunity or slow month shows up, cash suddenly feels hard to find, or, something happens in the world, in the economy, a COVID, an '08, whatever the case might be, quiet frustration, and then all of a sudden you're like, yeah, I'm doing everything right, yet, it still hasn't arrived. And so is anybody commenting? I don't know. Let me pull the chat up so I can see.
Yeah, we've got a couple that have
They're already
acknowledged
in
that
that
that's kind
direction.
of the case as well.
Yeah.
Real estate, not a lot of cash flow, so it's
Yeah.
um,
So there's people on here right now. Very, very common. So question nobody asked, what if the amount of money you have was never the real problem and never the real answer? So two people in their 40s, same net worth on paper. One feels completely at ease about money. The other feels perpetually stressed. If the number is identical, the number isn't what's creating the difference. And it kind of gets a little more into another topic here too, Craig, is not only, the net worth, but expenses, cost of living. I mean, I fall into this sometimes, but how many people, Craig, do you meet that it's the more money you make, the more you start spending, and then all of a sudden, when I first got into real estate investing, this was a long time ago, but my I learned this very, very quickly. I learned that your income and the amount of money you are able to generate and create for yourself is not anywhere near tied to, that stress-free life, that feeling like you have enough money. It just, keeping up with the Joneses, they call it. But I met so many doctors and I met doctors and lawyers and high net worth people that were renting. They didn't even own their own homes. They just never understood money. They never understood the importance of this. Or, they go out and they buy these rental properties with mortgages, but not really understanding cash flow. And, it'd create all these problems and issues. And, it need a roof or there need to be, something happened in the house. And all of a sudden, all that money that was coming in is gone. It just evaporates. And so a lot of it's just understanding things.
Yeah, and in Nelson Nash's book, Becoming Your Own Banker, he talks about something called Parkinson's law. And one of the aspects of Parkinson's law is that our expenses will continue to rise as our income rises. And we need to solve that puzzle. We need to stop doing that. So every time you get a raise, you upscale your life, and then you get a raise, you upscale your life. And the the result is kind of like what Steven's talking about. You have, maybe people high wage earners, high salary earners, but yet they have spent so much on toys and boats and vacation homes and other things that they're always trapped. They have to continue to keep making that much money to keep that lifestyle. So that's part of the challenge is, we can be making a lot of money, but what are we doing with that money?
Yeah. Yeah, I mean, a great, a great example, Craig, locking money up in retirement accounts.
Mhm.
We went back to it. Why put money in a 401k and IRAs? When you put the money in there, if you pull it out, you're going to be penalized. You're going to pay the taxes on it anyways. You're locking that money up until retirement. What if there was better uses for that money that you could have, other opportunities you could use that money? Well, you're going to be penalized for doing it. So a lot of times it just goes back to the beginning, being smart about it, understanding money, understanding how money flows and moves and vehicles that, aren't traditional that everybody's taught that might be better. And that's a big part of what these whole life, especially design whole life policies and the infinite banking concept really are, right?
Yeah, yeah,
Um, just kind of how we were taught about money. So two ways to measure wealth. Net worth, again, what we were just talking about, accounts, assets, balances, retirement accounts, everything else, a snapshot in time, the number on a statement, it tells you what you own, not what you can use. And then there's freedom, choices, options, breathing room, the ability to access, redirect, use capital when it actually matters on your timeline, not somebody else's. Does anybody feel like they fall into these categories? What do you think, Craig?
yeah. And I want to kind of throw some caution to the wind too, because Jen brought up a point like, hey, you can use Roth as well, and absolutely you can use Roth, and those provide some really good benefits down the road. What I would want everyone to think about is what we're taught is let's go down a path and put all of our money into these vehicles that are for down the road long term. We're just going to store the money and sit on them. Maybe we get a big net worth. There's a place in our financial personal economies and worlds where some of that's going to happen, but do you also have resources or assets that allow you to have choices where you have access to money, that you have the ability to make the decisions when and how you use that? So I'd say in a 401k and a Roth, there's some benefits there, but maybe we don't have as much liquidity and access to capital when and how we want to use it without penalties. So I think when we look at this chart, net worth, freedom, let's think about those things as well. What do you have in your personal economy in terms of assets that maybe some of them fall into that net worth bucket for accumulation down the road, but do you also have something on the freedom bucket?
Yeah, I mean, and just an example of that, Craig, like what if a family member came to you and was like, matter of life or death, I need $50,000 right now. Would you do everything you could to get that $50,000 to help that family member? Absolutely, right? We all would. But the difference between net worth and freedom comes down to if you did that, would it affect you? Would it affect your plan? Would it throw everything off? When these uninterrupted things happen in our lives, does it completely disrupt your entire scenario? Or are you able to keep going and keep moving forward? I mean,
Yeah.
when we talk about freedom, a lot of times we don't talk about a number. Net worth is okay, what's your net worth? 1 million, 2 million, 5 million, 100,000, negative 50,000, right? Or whatever. When it comes to freedom, it's what are you able to do? Travel, help other people, jump on opportunities when they arise. Notice we're not talking about specific numbers there. Of course, you need the numbers to be able to do that, but what does that mean to you? What does that look like? And those are kind of some of the differences right there.
So, Stephen, what if I came to you tomorrow? I know your answer, but I think this is just um, just a question for people to ponder. But let's say I came to you and like, hey, Stephen, do you have 50,000 or 100? Because I've got an opportunity to purchase a piece of real estate. It's worth, say, 300,000. I need 100,000 years so that property's backed up by that. I'll give you 12 to 15%. So let's say you've checked me out, you know all the things, but now you have this opportunity to put this 50 or this 100,000 to work at 12 or 15% backed by a $300,000 property. Well, wouldn't that be great if you had the ability, the access, and the use of capital to do that? But a lot of times you may have to say, well, I can't jump on that because I don't have it available. It could be 20,000, it could be 10,000, but I'm just saying those are the things that we're talking about when we express this freedom type approach versus the accumulation model.
Yeah, I love it. And so most of us believe and we're taught that if we can build that left column big enough, the net worth, that everything's going to take care of itself, that freedom and that right column is going to happen for us. But I see it every single day, and maybe you've gone through this yourselves, but let me just ask it directly. How many middle income earners, middle to high income earners, it just hasn't turned out to be true. It hasn't actually happened. And so the question comes like, where and why and how did we come to learn and think this way? Like, why do we think that that left column will automatically fix that right column? It doesn't come from nowhere. So how does that happen? And so we learn to think this way, the save, invest, don't touch it, wait, hope for freedom later. Where does that come from, Craig?
Comes from, what we were taught to do.
Yep.
And
Banks,
you know,
financial institutions, financial advisors, the people that profit and make money off of that way of thinking at the end of the day, right?
yeah, and anytime I'm not a hardcore, conspiracy theorist, but anytime you try to deviate from kind of the standard, the normal, the status quo, oh, you're doing some scam or you're off your rocker. I mean, and Steven, I don't know if you've got the same thing, but when I talk to people I know in my inner circle, whether it's family or close friends, like they just look at you like you're crazy when you
Yeah.
talk about this stuff. But because we're not doing the status quo, we're not doing things the way we were told to do them.
Yeah. And at the end of the day, it kind of boils down to us just being told to give up control of our money. I mean, you just brought up a great example with that real estate deal. If I could do that, I mean, I can't, if you need that money, Craig, I can't tell you, hey, I got to wait till I'm 59 and a half years old so I can pull the money from my retirement account to now give to you. That deal, I'm 43. I'm 43. Holy cow, I'm getting there. But
Wow.
but at the end of the day, you're not going to wait 16 and a half years for me, right? So I need that money today, but we're just taught for generations to give up control of that money and hope for the best. And so we're giving up control, we're giving up access, we're giving up potential cash flow we could create. Um and that's kind of where we're at as a country today, right?
Yep. Yep.
So let's actually look at putting a number on what some of that costs someone, not in theory, but in real decisions. So the hidden cost of rate of return only thinking. Um, take $150 sitting in a retirement account, growing exactly as planned. then a real rare real estate opportunity appears, the kind you won't see again for years. Every dollar has a job. If it only has one job, growth, it can only create one kind of value. Rate of return measures how a dollar performs while it sits still. It says nothing about what that dollar could have done if it had been available to move. So, what we call opportunity cost. Opportunity cost isn't just what you paid, it's the value of what you couldn't do because your capital was somewhere else.
Yeah.
Think about that. How many of your dollars, how much of your money is sitting places that's out of your control? So let me tell you about someone who learned it the hard way, because I think a few of you are going to recognize yourselves in this story. So this was Mark. He had over $1 million in assets. He couldn't get to $40,000. 25 years building his career, 401k, mutual funds, rental property, equity in his home. And then in the same month, a rare investment opportunity he'd never see again, and an unexpected medical bill 9 days before his mortgage was due. Mark had over $1 million in assets and couldn't comfortably access $40,000 without taxes, penalties, or a 6-week loan process. Net worth measures what you have. It says nothing about what you can use.
And Stephen, I think it's obvious, but you have equity in the house. Let's say you've got other assets, and now you want to, maybe pull some equity out, do a HELOC, refinance. The banks are only going to give you that access to that money when you don't really need it. But when medical bills show up, job losses happen, income drops, income goes away, those are the times when you most need the money, but it's locked up. Say your equity's locked up with the bank, you can't get to it. So, one of the things we're really trying to stress today is not that it's bad you have these assets sitting over there doing, mutual funds, 401ks. I mean, could you have some other opportunities, do some other things? Um, but what do you have on the other side of the equation where I don't have to beg and qualify and ask for the money? That's really what the conversation we should all be having with ourselves is how much of my assets are in a thing where I can't really do much with it? How much of my assets are over in a tool or a place where I do have access to it? And you could go through this exercise for yourself and say, hey, I've got a first lien HELOC or I have a HELOC, so I have access to some of that. That's great. I have a majority of my money in my 401k at work, not really as accessible as I want it. So kind of go through that process for yourself and just think, what would you do if this was you and you needed 40,000?
Yeah, absolutely, man. And so if net worth isn't the answer, what do we mean when we talk about cash flow? And what is cash flow really? I mean, cash flow simply means money coming in. A lot of people will think about their P&L, revenue in, expenses out. It's real, it matters. But we want to kind of broaden that definition a little bit because there's a second kind of cash flow almost nobody discusses, which is the cash flow available to you personally from all of your capital, not just your income generated. So a lot of people, cash flow is just income coming in minus expenses going out. But the way we look at it, cash flow is the movement of money you control, the ability to access and redirect capital on your terms without giving up its growth. So think about that one more time. The ability to access and redirect capital on your terms without giving up its growth.
So what are some tools out there that if you've got some ideas in the audience, what are some tools out there that would allow you to access and redirect capital on your terms without giving up its growth? Because there's more than one. I'm just kind of curious, what are some ideas out there? Does anyone have thoughts on what tools you could use?
And while they're putting some tools in there, Craig, I'll just kind of show you some of the different kind of mindset behind it. So the two different financial models, pathways. So path A, accumulation, earning, saving, walk away, wait, hope. Again, this is 401ks,
Mhm.
traditional brokerage accounts, um, just a savings account in a bank, CDs, earn it, save it, lock it away, wait, and hope. Freedom is deferred, a future event, not a present reality. And then we have path B where we can control where we're earning, but then we're directing. We're directing where we want. We direct into these opportunities. We remain and keep access to that money. We keep that money moving instead of just constantly waiting. And it creates freedom not only for the future, but freedom for us now because we can access and control this. We're not locking it away and waiting like the traditional pathway for most people is created. So freedom is experienced gradually along the entire journey. Neither path says don't save. The difference is entirely about control, whether capital has one job or several. And so back to your question, Craig, what are some of those vehicles?
So Warren came in with HELOC policy loans.
Yeah.
Shauna's got, kind of the whole idea is how can I collateralize something I own? Deborah's talking about investing in businesses. And so that's great because what I was hoping to hear were things like HELOCs, maybe even margin accounts with your stock accounts. Because if I'm using money for my HELOC, my house can still appreciate. It's not going to change that. Whole life insurance, if I'm using that, it's not impacting the growth. If I have a margin account with my stocks, well, the stocks are still out there. But with all of that said, now let me ask you a question. If you couldn't pay those back and you got a margin call, what happens to your stocks? Well, you're going to be selling some stocks probably at a loss. If you ever HELOC and you run into problems where you can't pay that back, your home's at risk. So, Stephen, if you had a policy loan and you couldn't pay it back, what's going to happen to your policy?
It's going to continue growing and performing the same way.
Yeah, so my point is nothing's going to happen with that. So although there's other tools out there that you could still kind of use this path B control with, and I would still use some of those tools, we just need to be aware of all of the things and why Steven, myself, Shauna, Tess, Brian, everyone on here, we like whole life so much is because it's that control. It's not only the control, but we have that uninterrupted compounding. And when we take loans, we don't have to pay them back. We pay them back on our terms. So when we really talk about control, I don't know of anything else that gives us this level of control, although there are some other tools out there that could work. This is hands down the one that's got the most benefits with it. Um, but I just wanted to kind of run through that exercise because a lot of times people say, well, I could do the infinite banking process with a margin account. You can, but it comes with some asterisks with it, right? You could do it with your HELOC, and I use my HELOC all the time too. So we just have to know what are the boundaries of where we want to, push those HELOCs. But with my policies, if I take policy loans, I don't worry about all when I have to pay them back. I pay them back, but it's on my terms. So
Yep, absolutely. And kind of this principle right here, it's going to change, literally how you evaluate every financial decision, from this point forward. And so you cannot predict the future. You can build a life that's resilient no matter what the future brings. But, if I asked an honest question to everybody in the room right now, can you accurately predict what interest rates are going to do next year? What the market's going to do next year? Can you tell me exactly what your industry that you work in is going to look like in 5 years from now? I don't think anybody can answer those questions. Nobody knows what the market's doing, that's for sure. With AI and technology right now, it is disrupting almost every single industry out there. And the reason I ask that is because, of course, we can't predict that stuff. If you could, you'd be the richest person in the world. But if you think about it, that's how most traditional financial planning operates is through those predictions, is having that general concept of pretending to know what the future brings. And that's really what all of those traditional financial, that path A is built on. So we want to kind of reintroduce the way we look at this stuff. And here's what I've come to believe. And I think it's one of the most freeing ideas you could hear. You don't need to predict the future. You don't need to predict the future. You need to build a financial life that's resilient no matter what the future brings. Think about that for a second. And resilience doesn't come from a great forecast, it comes from control. So instead of asking what will get me the highest return, ask this new question. What gives me the most control regardless of what happens next? And Craig brought this up earlier. You can make great returns for 5, 6, 7, 10 years in a row, but if you have one very, very bad year, it's going to take you a long time to recoup those 10 years of growth, right, Craig? The drawdown effect.
Certainly can. Yeah.
So instead, by having that control and understanding that, it can make all the difference in the world. A person with strong cash flow and access to capital can adapt to almost anything, a slow year, a new opportunity, a shift in the market, and it's by design. And so the question changes. It's no longer what will get me the highest return, what gives me that most control? So once you start asking that question, you start noticing something you've probably never paid attention to before. Who actually controls the movement of your money? And that's where we start getting into banking and the banking functions. Banking isn't a place, it's a function. And someone always performs. Now, banks exist, our whole life policies exist. But again, I said this before, the power of it comes in the concept, its function. Every major purchase is financed, your car, your home, equipment, even a slow month covered by a line of credit. Financing happens. It happened. The questions was never whether, it was who. Banks profit from controlling your capital. We talked about that a little while ago. You pay someone else to perform that function if you don't. Every time you finance a purchase through a traditional lender, you're paying someone else for a function your own capital might be able to perform if structured differently. That's really the foundation of this, Craig.
Yep. And I would overlay on all of these the whole concept which talked about already, which is opportunity cost, because even if we pay cash for something, a lot of people say, well, you didn't finance that, you paid it with cash. The way we look at it, because we think differently now, is we look at that you financed that thing, but it was one big payment. And now you've lost all opportunity for that money to do something else. So if I buy a car from a dealer and I pay one big chunk, I finance that car with one payment. I've now lost the opportunity to earn that money. Now, there could be some cases where it makes sense to do that. Maybe it doesn't, but this is the kind of thinking we want you all to have is, does this transaction make sense? Who's in control of it? Who benefits from it? Could I do something else with this money? And if we start thinking that way and we start rethinking how we traditionally have thought, we're definitely going to be in a better place going forward. It might hurt a little bit because we're going to have to change some of our behaviors, but that's really what we're trying to teach here today is there's a different way out there than what we've been told to do. And
Absolutely.
it's really just learning that banking function. If we do what the banks do instead of do what they tell us to do, we'll be in a much better position.
Yeah, and here's a great example of that. Two business owners, same net worth, but completely different life. So we have person A, 1.2 million in assets, traditional accounts and financing, everything growing, everything locked, opportunities and rough patches both require applying, waiting, sometimes paying penalties to access their own money. Person two, same 1.2 million in assets, same net worth, different structure, capital built with access and control from the start, can move on opportunities or hardships without asking permission or waiting 6 weeks. And that's really the biggest difference right there. And that's exactly what we talk about all the time. Would you rather put your money in someone else's bank, give up control and have them make all the money, or keep it in your banking system? And this is nothing to mention about the legacy aspects of this and the generational wealth aspects of this and the rest of it. And so, save 20 years of hard work. The difference was never how much they had, it was how much control they had over it. So we want to start reframing the questions you ask about money. So instead of what's my return, what's my control? Instead of how fast can I pay this off, how can this dollar keep working while I repay it? Instead of what should I invest in, what problem am I actually trying to solve? And so, what if the goal was never more money, but more options? Wealth was never really about the size of the number. It's about how many choices that number gives you to seize an opportunity, whether a hard season or help someone you love without derailing your own plan. Goes back to you can look good on paper, but still feel stuck. And so what this means for you, you don't need a new amount of money. You need a new lens, a new set of glasses, rose colored glasses, as they say. Ask two questions first. Before you evaluate return on any decision, ask, what does this do to my access? And what does this do to my control? This is a shift, not an overnight rebuild. You won't restructure 20 years of decisions overnight, and you shouldn't try to. Start by asking better questions about what's already in front of you. Some of you will want to go deeper. For some, today is enough to start shifting how you think. For others, you'll want to see exactly how this applies to your own balance sheet. Both are completely valid, and we're here for both. We do 6 webinars every single week free of charge. We have a YouTube channel with education on it every day. We have our money mentors available, ready to talk to you, ready to look at your situation, ready to help you solve your money problem. That's what this can do for you. So let me tell you what the second option actually looks like in case it's useful. Strategy session. It's not a sales appointment. I've mentioned this a couple different times. It's looking at your situation and applying the principles to your specific income, assets, goals, and money problems. It's a conversation. It's on Zoom. We want to be able to share screen with you. We want to be able to start showing you the stuff. We want you to develop a relationship with us and our team and your money mentor. Because again, this is not short term. This is not get rich quick. This is not, let me solve this today. This is for years and years and years to come, not only for you, but your entire family. And so financial freedom isn't created by how much your money grows. It's created by how much control you have over the cash flow it produces. So I just wanted to thank everybody for being here today. We're coming up to the end of the show. If anybody has any questions, please throw them out there. Otherwise, get those calls scheduled or put your phone number in the chat box and a money mentor will call you here shortly. But with that being said, Craig, thank you for your time. Any final words here?
No, I just think I was looking to see if we hit all the questions. If you do have any last minute questions, get those in the Q&A. We'll try to address those. But I hope this was useful for everybody. And I guess the big takeaway is rethink your thinking, think how your money, excuse me, think how your money flows, who's got the control of it, how much access do you have it. And if you go forward from this point with those things in mind, I think you'll be in a much better position long term. So rethink your thinking. And with that, back to you, Mr. Nagy.
Great, man. Very, very cool stuff. So, Anna, I got that number there. If anybody else wants to throw their number out, we will get that over to, or we will give you guys a call here shortly. Otherwise, the calendar link is on there to schedule a call at your convenience, which is very, very easy. Perry, I see your number as well. We will get that saved. Perfect. Very good stuff. But with that said, Shauna, Tess, Craig, everybody that's here each week, everybody that was new on here, I hope this was of value to you. I hope you guys all learned something new today, maybe a new way of looking at money, looking at your own lives, your own situations. I know we didn't get into a lot of specifics on how we're going to do this to pay off your debt and the different options with that, how to leverage using HELOCs and all-in-ones, how to grow your wealth through real estate investing. We'll save that for another time and another place, maybe next week's wealth webinar or the following. But we do this each and every single Wednesday, 1 p.m. Eastern, live and direct. If you're watching this on YouTube, hop on live sometimes. It is a lot of fun being able to interact in the chat box, but we appreciate you watching on YouTube as well. And we'll talk with you guys real soon. So it's from Stephen Nagy, Chris Naugle, Craig Yenny, the rest of the BYOB Money School team. We thank you, and we'll see you guys next time. Thanks. Bye.